Okay, good evening, good afternoon, and hello, ladies and gentlemen. Welcome to the Elite Traders University presentation of the Pip and Run Market Outlook for the week beginning February 17th, 2019. And I'm Greg McLeod, Master Trader and Trade Instructor here at the Elite Traders University and the Pip and Run Bootcamp. So glad to be with you here on this fabulous Sunday or whatever day you're watching this. I may be watching a recording, you may be watching it live. If not, we're glad to see you in the room, and we're going to talk about the markets. This is the way for you to actually plan your week. I give you the market plan, the update that my Elite Traders University students and Pip and Run boot campers will get, and you get that as well as being a subscriber on my list. And if you're not a subscriber, go over to Elite Traders University and join my list. Okay, great. Now, there is a risk disclaimer on your screen. Make sure you understand all risks associated with foreign exchange trading. All right. Cool. And for those of you who don't know who I am, my name is Greg McLeod, and I'm the founder of Elite Traders University. 22-year trading veteran. I've traded options, futures, Forex, crypto, whatever it has a chart. I've traded it, and I spent 8 years as a currency analyst at one of the largest Forex brokers in the world, FXCM. I also worked at a top-tier bank, Bank of America. I've also worked for Pepperstone, and I've spent 16 years in public education. I own a lifetime teaching credential, California, the state of California. And I worked at a prop trading desk. And so I'm uniquely qualified. I'm a Wall Street insider that's turned tails to help the retail people out there to become successful traders. And you can check out, go over to my site, elitetradersuniversity.com, and check out my website. And if you're interested in joining, we'll look forward to talking with you, giving you a free coaching call. Go ahead and sign up right there. Okay, let's go ahead and get right into it. Oh, we did that already. Let's go ahead and our agenda, the Pip and Run market forecast. We're going to look at the pound dollar, the euro, the Aussie dollar, the dollar yen, pound yen, dollar CAD, the FTSE 100, the S&P 500, gold, oil, and Brent oil, and WTI, West Texas Intermediate. Okay, so we got a lot to cover, so let's get going. Okay, and before we get farther along, we're going to go ahead and go to my Forex heat map. And I'll show you how to get there, and you can get like a trial for $1. And it's a great trading tool I use to consult and start analyzing the market. So let's go ahead and get to it. Okay, we're going to head over to my Forex heat map. Go to www.myforexheatmap.com. You can subscribe. You can get a 7-day trial for $1, and it's the best buck you ever spend. I'm going to go ahead and log into that. And my Forex heat map. And so there's a lot of the tools there. There's you can access the my Forex heat map, which is arrangement of currency pairs by percentage change. Right now it is it's not it's the weekend, so you're not going to see any rates. They're all going to be dark because this is where the market closed. But these tiles will move and change different colors, green and they'll flash yellow, and they'll move red for bearish, green for bullish, and so it tells you what's hopping, what's popping, what's dropping, and what's not. Right now, it's the weekend. Trading desks are closed, and they'll be open again on Sunday. So we'll see these pop and open, but that's not what we're going to be looking at right now. We're actually going to be using these other tools that come in with your subscription. So let's go ahead and go right to we want to look at the economic calendar and see what news is coming up. The news that confuses, it can, but we should be aware of what's coming up. And what we're going to do is we're going to look at only the high impact news, the high impact news, right, for that week, for next week coming up. Okay. For Monday, February 18th, we have RBA minutes, and it's a high impact, and basically they're going to talk about the interest rate decision that they did like last week. And what was discussed, whether they're going to be hawkish or they're going to continue to lower rates, or maybe lower rates or raise rates. So that's going to be very important because interest rates are the biggest drivers of currency. So we could see the Aussie dollar big time in play on Monday. Now, remember, it's also a holiday. It's President's Day. So, while we're all here in the U.S., maybe barbecuing or shopping or, just taking a break from all the snow, maybe just kicking back at home from the fireplace. The markets are still going to be open. Okay, so the stock market will be closed, but the Forex market really never closes. In fact, your trading desk close and your brokers close, but the Forex really never closes. You just can't trade it. Okay, Aussie dollar going to be in play. Watch what happens. If the economy is strong, then they might say that, hey, they're going to raise rates maybe eventually, or maybe there's going to hold pat. But anyway, whatever they say is going to cause the Aussie dollar to move. So you don't want to be in it beforehand. Gaming this probably is not a great idea, but waiting a couple of minutes or maybe an hour or so after the announcement, that's where the market will get its true direction, okay? Because it'll chop you up. So if all of a sudden you're in the Aussie dollar and go, well, gee, I wonder what's going on, I got stuffed up. It's because you probably didn't check the economic calendar, okay? And you can go to myforexheatmap.com and it's right there. Okay. Now, later on that Tuesday, we have another high impact. We have the average earnings out of the UK, and it was 3.3 before. And we'll see how the Brexit has affected it, but it's a high impact item. And so the pound will probably be in play. Again, the same kind of strategy between 4:30, 3:30, a little bit after. Wait till 5:30 to look at how the market shakes out, because the big guys are going to stand outside the market. The market's going to get illiquid and start chopping around, and then it's going to take its direction. You don't want to be in that chop. You want to be drafting behind the fat cats, these big fat cats who are pushing the markets around, okay? Now, at 5 a.m., we're going to have this EEW survey of economic sentiment. Sentiment is very, very important because it's also how people feel. If they feel unsure or they feel scared, they're going to react to fear and scared faster than joy and happiness. So, actually, the economic sentiment looks like it's going to forecast to get worse from -15 to -18.4. That looks bad. Now, actually, if it comes up better than expected, expect the euro to rise. Okay. However, if it comes up worse, like at -19 or -20, expect the euro to sink. The euro staged a really big rally toward the end of the week. Okay, after touching the lows I talked about in the last market outlook. So we may pull back a little bit on this and maybe continue. If it's a surprise and the market's caught off guard, look for some big moves in the market. So don't be in the euro before this time. Wait a half hour to an hour for the news fade, because sometimes this will move one direction and go the opposite. Okay, so it may drop on this number, all right, and then did a U-turn and go the opposite direction. That's called the news fade. And, if you send me an email, I'll send you the link to my news fade strategy video. Okay, so I want to support you in every way I can, and give you the tools for you to succeed. All right. Now the U.S. finally, after we come back from holiday, I know Tuesday, got Wednesday, we have data coming out of the U.S. and it's a bunch of data. And I think our clock is in another time zone here, because normal data comes out at, this must be 10. This must be 10. So it must be 4-hour time difference here. Okay. So we got U.S. retail sales that comes out. Forecast call for 0.10. Retail sales for the retail sales control group 0.4, and month-on-month 0.1. Okay. So look for the dollar. If you don't want to trade a dollar pair like dollar yen or dollar Swiss, you can always trade the euro. The euro is the anti-dollar. And sometimes negative news for the dollar actually is good for the dollar, because people run into bonds. They're scared. But it may also benefit the euro. But just wait for a half hour to an hour. Wait for the reaction and then look to fade the reaction. Okay. Again, the news fade strategy. Now, some things may not happen for a while because the minutes are coming out at 2 p.m. And again, I don't know what these numbers, this is kind of interesting. FOMC minutes usually come at 2 p.m., that's 1400. Yeah, that's 2 p.m., right? 2 plus 12, 14. Okay. So that comes out at 2 p.m. FOMC minutes. It's similar to the RBA minutes. It's the notes of the interest rate decision meeting that they had. And sometimes that will hold sway over the markets, because they might say, well, we really wanted to hike, but this guy voted no. And we really, think next time we want to hike, or maybe we want to cut, or maybe we want to keep things flat. I know Janet Yellen talked about cutting rates if everything looked weak. And the market's still in a bear market. It rallied over 400 points on Friday. But this could be a bear market. Rallies are severe, and they make it look very bullish. but we could see maybe a continuation of the rally on Monday and then a drop on Tuesday, right? As we continue to work our way down in a downward trend channel. Okay, so that so the markets may be flat until FOMC minutes come out. So if everything kind of sideways, and this is actually a good time to go into cross rates, maybe like Aussie CAD, Euro CAD, things that don't have the dollar in them, because a lot of people are going to be waiting for FOMC and the dollar is going to be held hostage until this number comes out. Aussie dollar employment change, or Australian employment change, supposed to drop from 21.6 to 16.5. That could send the Aussie lower. And also we have employment rate ticking up from 5 to 5.1. There are going to be a lot of unemployed Aussies maybe. And if so, that's going to be a weakening for the Australian dollar, especially if the minutes were bearish or dovish. We say dovish if we think rates are going down. Hawkish if we believe rates are going up. Dovish down, hawkish up. Hawkish, hawks fly. Well, doves fly too. That won't work. But anyway, think hawkish. They want to raise rates. Dovish. So it's like bulls and bears. They like using the animal thing, lots of animals in the financial market. Anyway, we have Thursday, harmonized index of consumer confidence. Consumer prices, okay. Of consumer prices, okay. So expected to be flat, 1.7%. Kind of hard to raise prices in a low zero interest rate environment. Market manufacturing purchasing manager index, 49.7. No forecast given. Again, even though it's German data, Germany is the largest economy in the Eurozone. So where Germany goes, that's where the Euro is going to go. Okay. And then there's the market PMI composite for all the Eurozone. That comes out too. All that for Thursday. So Thursday's going to be a big Euro day. And, and we figure that after the FOMC minutes, the Euro will be back in trading, trading either straight up or down, because the FOMC minutes are letting the dollar go where it wants to go. Friday, the only news out there that's impactful will be retail sales month on month. And we want to take a look at what's going on CAD. Especially like dollar CAD, Euro CAD, okay. And if it's good, then we could see lots of the Canadian buying things. We could see a rally in the Canadian dollar. Also, oil's been ticking up, and I can tell by the gas pump we were like 180, 185 per gallon for gasoline, and now we're looking at 215. So oil seems to be ticking up, and we'll take a look at that chart. But usually when the price of oil goes up, the Canadian dollar is also going up as well. Okay. So that is the news. I'm going to throw in here. Let's take a look at some sentiment. Not cinnamon plus mint, sentiment. No, sentiment means how people feel about certain currencies and things like that. We'll look at the currencies and we can see that the retail, lots of people are long Aussie dollar, right? They're really long. They're not very short. Usually, not all the time, but usually when people or retail traders are excessively long, it means that we might have a little bit of a reversal, right? And we have some RBA news coming out, and they may be dovish by saying, hey, we might cut rates. Well, then all of a sudden these Aussie longs are on the wrong side of the trade. They're going to have to pay these guys who are short. Only 29.27 of these guys are short, and 70% of these guys are long. And the losers pay winners, and there's more of these guys than these guys. These guys may be paying these guys. So we could see Aussie dollar correct, just based on sentiment. Now, we look at sentiment, we look at no data, but we also want to look at charts. We'll compare some charts too, but I'm just going to look at a few of these here. Canadian dollar, we have, again, a lot of people are short Canadian dollar. 59.47% of people are short. 40.53 are long. So the longs may smoke the shorts here as well. And, with the taking up of oil, these guys may end up paying these guys, right? The losers pay winners. Now, whether you have 51 to 48, this is kind of close. Now, this is interesting here. Look at this, the euro. 37.53% of the people are long, but 62.47% are short. These longs are gonna smoke these shorts, it looks like, right? This is a huge. If there's going to be a trading possible move to bank on or to look at, you want to look at this kind of an imbalance, almost like a 2-to-1 imbalance. Another imbalance here is the Kiwi. Okay, you got 73.75% of people are short, right? And only 26.25% of people are long. And these guys are going to get smoked by these long. So you may look at Kiwi dollar, it may be looking like it's pulling back. That thing may be going to slingshot north, and a lot of these guys are going to be in pain. These losers may pay the winners over here, perhaps, okay, based on sentiment, okay, because especially because there's a 3-to-1 difference between longs and shorts. So let's take a look at these. And then if you pair up Euro and Kiwi together, well, they're gonna move sideways because you've got these guys are short and these guys are also short, right? So anyway, let's go ahead and look at some charts, which we have on my Forex heat map. Which, not only do you have the arrangements of currencies by percentage change, you also have, the national calendar, a national holidays calendar. So like, what's going on in the United States? I'm wearing a flag, so I know what's going on in the United States, baby. It's President's Day, baby! Happy birthday, Mr. President! Okay. I don't know, it's Trump's birthday is February. But it is a, the day we celebrate. Although I think they put Lincoln, I think everybody, just, not just their birthdays, but just, celebrating the president. Okay? So there we go. February 18th, President's Day. And hey, Andalusia Day in Spain. Happy Andalusia Day to you. February 28th. Okay? All right. And, but don't forget Nova Scotia Heritage Day and Luis Riel Day and Family Day, which somebody from Canada told me we celebrate Family Day. And that's, that was Mr. Cormier. I forgot your first name. I just remember we say Cormier Chevrolet over here. Anyway, okay, having a flashback. All right, so we looked at the. Let's look at financial news. Just the news is going to change. Nothing has happened yet, but it's kind of interesting to see what happened. There is news going on right now on the weekend because President Trump just declared a national emergency, allowing funds to be used. Defense funds used to support building the wall, and so that is going to be pretty wild. See how the markets react to that on Monday. Aussie forecast: Aussie stays as risk appetite improves. The Australian dollar made considerable gains last week after suffering sharp losses early in the week. The upcoming week, investors will be keeping a close eye on the RBA minutes. Oh, I just told you that. Here's now a look for the highlights of this week. Blah blah blah. Okay. And anyway, these guys say the same thing. Hey, you don't have to listen to me. You just come to my Forex heat map, and all this stuff is there in case you forget anything I said. But you also can watch the replay as often as you like. Okay, let's go to the charts. I'm like, dude, get to the charts, man. I'm really tired of this fundamental blah blah blah, yakety 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 yak. I know, I understand, right? When I worked for the brokerage, I was forced to give reports on this, and many people found it quite helpful. Okay, but I didn't understand it either, and I just wanted to trade charts until I found out, like, this stuff's kind of important, huh? Yeah, I was like, why did I get backslapped by some news report? Oh, because there was a news report that was out. It's like, oh, okay, all right. So this is my my secret weapon here. And we can see a number of people. Remember those sentiment people? Not the cinnamon mint people, but the sentiment people. Many of them are bearish. And Mr. Line, go away. Okay. All right. He wants to play it like that. All right. What's my line? Whoa. All right. So we have we may come back and tag this low. This low is all alone, needs to be tagged. It's going to give us a wicked double bottom here. I mean, this double bottom here would be huge, okay, to quote a famous president. It'll be huge. Why? Because we have a low here, okay, And this price is not there yet, but it could tag there, right? Now, once it tags there, this is a daily chart, and we're really far away from this 13-period moving average. We will probably have a pretty steep rally up when we break this trend line confirmation, a break of 113.10, and we go to Pluto. Okay, this is gonna. That's why the sentiment is all like wacky. Like, yeah, 70% of people are short because they think, hey, lower swing highs and lower swing lows, we're in a downtrend, right? Yeah. But these guys who got short way up here, I have made a ton of money and they're going to take profit. We're at a banker support level, and you really should go on Facebook, go to Forex Payday's Facebook page, and there's some trainings on there that you really should watch. One guy goes, well, that's kind of worthless information, Greg. I'm like going, dude, come on, man. I didn't give you no worthless information. Banker support levels, I'm talking about it. 0 to 2.5. Come on now. This thing is gonna be rolling on up really quick, and you guys are gonna get not you, because you guys are smart. You're listening. I get people going, oh, that's a bunch of sales presentation, Greg. It's like, dude, come on now. I'm talking about precision entries, baby. Break above the trend line, long with a stop below. I'm not giving any trade advice or recommendations here. Beep, beep, back up the truck. Right? But that's what I'm looking at. But I'm looking for a break confirmation above the high, and I'm in like Flint. Okay, that's just like, are you gonna give me that? Are you gonna give me that? Every time I will take that trade. Why? Because I wrote an article on it. Look at that. Double bottom in gold. I wrote this a gazillion years ago, 2014. It doesn't change, guy. Pattern break, maximum price objective. But if you get in here instead of here, because this was old stuff, my new stuff, I get in here, our target's there, right? Looks like that, right? Maybe? Oh, I don't know, Greg. Hey, dude, if you don't know your shapes and colors, I'm sorry if you failed kindergarten, man. That's not my problem. Anyway, this looks bullish. Okay. But it's lower swing highs. We're in a downtrend, Greg. Below the 13-period moving average. You said it yourself. Okay, confirmation, guys. A break above 13.13. Somebody's playing the joke right there. 13.13. This thing goes to Pluto. Okay. All right. And let's go ahead to, especially if they avert the shutdown too, we get some good news. Let's look at the DXY, or the US dollar index. US dollar index. US dollar index, which is an arrangement of currency pairs. No, it's not. That's my other speech. It's a part of the basket, a currency basket, not basket case. People are like, Greg's a basket case. No, but look at that. This is the US dollar, the Dow Jones FXCM, my old employer, US dollar index. I remember when it first came out. It came out at 10,000. I remember when it opened up. Long time ago. But look, we're at 12,000. Dang, you go dollar, right? But look at this. Lower swing highs, lower swing lows. Boom. And then we rallied up to a Fibonacci resistance level. And looks like the US dollar wants to roll over. Right? We're at the 786. We have a what we call a bearish evening star pattern. 3-candle pattern. If you're not familiar with Japanese candlestick patterns, they're invented by this guy Musa back. Well, actually, he was the first person to write about it. But they say that he became a billionaire trading rice. He could tell by looking at the candlesticks the fear and greed in the market. Okay, so we've got this this resistance we came into right at this Fibonacci area. The 618 we broke, and now we're back below it. So we can look like, and like we're above this. Yeah, it's true we are above, but we're closing in on that 13-period moving average. A confirmation is 1221. But no, we could probably come all the way back down to reach the low here, right? So this is bearish on a daily, and we basically got a head shoulder forming, and the neckline is down here at 120.88. Now this is the U.S. dollar index. You can trade that if you have this broker platform. However, other things that may roll over is like USD CAD. Okay, but I want to go in order. That way we covered. Didn't go out. I covered euro dollar first, but let's go to pound GBP USD. Okay, pound, interesting too, right? Where we are below the 13-period moving average, but look, we're making a higher low. Bears are trying to get down here, trying to get down to this wick at 123.71, and looks like it did not do that. Okay. Now again, we do have FOMC minutes, and that will tell us about whether we go higher or not. I think we go much higher. If the Fed is really going to say, look, there's too much stuff going on. How can we raise rates with all this chaos going in Washington? People can't, are not working or not being able to be paid. The economy is reeling a little bit. Some parts of it doing well, some parts aren't doing well. So it would be kind of not too smart to raise rates. So if they don't raise rates, guess what? They're going to run to another country that may raise rates, right? So we've got this nice little flag pattern, and we can look for a break of like 129.21 or so, maybe 129.50. We break the 50 area. We look for a move to 132.16, and so that we have we stopped right on a fib area, right there. We stopped the 50% retracement right there. We smacked with a bullish engulfing right there. You can zoom in on that. It's like, Greg, I can't see it. Get glasses. Get closer to the screen. Feel the heat. Oh yeah. Feel the heat. Like the candles. They're lighting the way, baby. Bullish engulfing right there. Nice reversal pattern. I'd like to see a break of the trend line. That's always mine. And a stop down below. If I were taking this trade, I'd be looking at something like that. And I look for the old high. Not get high, but the old high, right? And if a stop down below the low, there you go. That would be something I would look at for the British pound. All right, keep on going. Keep on trucking. AUD USD. Now, again, this might be interesting because usually the pairs against the dollar kind of rally together, right? This is interesting. We're just breaking above the 13-period moving average on the daily chart, and if we were to go down to an hour, like we broke out clearly. So we might get a little bit of a pullback in the RBA minutes. May give us a pullback. It may give us a pullback, and I probably need to go to 4 hour. Yeah, we got a nice rally out of there. Yeah, look, double bottom, rally, A, B, see you later. We can even take a Fibonacci expansion tool and go fibs up and pull back. And then maybe 71.56. Well, we're not that far. That's not much of a stretch. But all these red candles, this big wide-ranging candle is probably a gap. So we can see a move maybe back to this area, 72.93. Depends on the RBA minutes. If they, again, the minutes will probably determine, if they say, hey, the economy is okay, it's not as bad. You know why? Because China gave strong numbers, and China is Australia's largest trading partner. So they might say, well, in light of the new Chinese data, we don't think we're going to cut. We may keep things going, keep this party going for a while, because they're probably saying, it's not so bad since China. And I think these candles are based on the Chinese data that came out that was better than expected. Okay. So, but very interesting that RBA comes out. We might see a little bit of a pullback, right? And then people start shorting, And, so it really depends because we are at an old high. So just watch it. I would probably draw a trend line on this too and look for a break somewhere. If it breaks, it might break down a little bit. And it might come back and retest the low. So we have two scenarios there. Again, RBA minutes, central bank minutes, I wouldn't get ahead of those. I wouldn't try to game this because central bank announcements come out. Sometimes the market does the complete opposite. You think they say, oh, we're going to keep rates unchanged, and the thing drops. Or they raise rates and it drops. Okay? So we just never know. So I just would wait till after the minutes are released. Price will do its thing, and after it does its thing, it will give you the direction and give you the key. But at this point, it can go either way. It could fill this gap, go higher, maybe even hit 72.93 based on this kind of like bottoming formation, or this thing could double top here, break the trend line, and come back and test the low at 70.55. But that is our kind of like, two scenario. Oh, what's going on there? Are two scenarios that we're looking at. Okay. Either a break up or a break down. So, again, when there's a central bank, I just say, hey, you know what? Let the market tell me where it's going to go. Those are my two scenarios. So that's the Aussie dollar. So sorry, not much help there. But again, we've got big news like that. Don't game don't try to guess a central bank announcement, because it will do the opposite of what you think. Dollar yen's interesting, right? I actually traded that, did pretty well in that. I shorted it. It was pretty good. I shorted it live, and a bunch of people made some money, right? You guys made some money out there? Yeah, it was pretty good. And then and guys, Greg, if you know me, if you didn't trade with me for a while, you was like, Greg does not like dollar yen. What was going on then? Did he have the flu, or what was up that he would trade dollar yen? I was like, I don't know. It felt interesting at the time. Yeah, see, here it is. $1,000. It's like, well, it was creeping up on a whole number. Banker support and resistance, baby. Broke support and then dropped to my old target back here. And then I let some run, and then, it came down to what? 110.50, a banker support zone, 5-0, right? So, and it even rallied off that 5-0 and hit a little over 7.5 and pulled back down to 5-0 again, right? Anyway. You make $1,000 a day, 5 days a week, 5,000 a week times 4 weeks, is $20,000 a month. Yeah, you probably just want to if I can make $175 a week, Greg, I'm good. Well, you need to talk to me. All right, see what we can do. See how we can help you. Give you a game plan, dude. Talk to me. I get free calls, coaching calls, and I help people out. Like, a lot of people are scared, like, well, I don't want to talk to Greg because he's so important. It's like, I'm just an average guy from South Central LA who kind of learned trading, and figured it out. And like taking people for a ride and helping them make money too. So if you want to climb aboard, you're welcome to. Okay, so here we go. 4-hour chart. Again, now what's happening, we made higher swing highs, higher swing lows, and I told you I took that short, right? But see, we took that short down, now we rallied up, but we're on the other side of the trend. You gotta understand the other side, okay? Because now we are here on this side of the trend line. We were on this side of the trend line, everything is happy, we're buying the dips. You buy the dip here, boom, hit the trend line, baby. 2 points, make a trend line. That's from like high school geometry. If you ditch that day or were asleep, And your geometry teacher is laughing from heaven right now, going, I told you this stuff was going to come in handy. Greg's going to tell you to draw these lines on these points, and you're going to make all this money. But no, you're going to be a smart butt and say, teacher, what does drawing your trend lines and stuff have to do with making any money? Well, anyway, he probably were an astute student. Go, one day, someone will come and tell me that these lines were important. Right? So we got 2 points to make a line. We break that line. We go down to the next level of support. Go down to the next elevator. Oh, what's this price? So we're the wick there. Wick is right there. 54. We're really close to 50, right? You know, I mean, this is probably 50 right there, right? 45. So we're like right in there, right? Still a halfway move. This was our 100% expansion. You probably can see that. You go right like that, right? Take that line, clone it like a sheep. Clone. Bring in the clones. Bring in the clone. Hello? Oh. Ooh, maybe I don't have that feature here. Okay. I can just take it. I'm going to borrow it, and we borrow it. All right. Oh, wow, it's a little off, right? But it's 100%, right? Right there, right where that low is. And we just missed it, right? 100%. So this is the 50%. They put the 50% in before price even finished, right? So that, an angle bisector, right? Oh. Anyway. So break down, and then we look for price to move. Lower swing highs, lower swing lows. I'm sorry for the geometry lesson. I was having flashbacks. I like geometry. Hello, Sydney Shanks, my honors geometry teacher. Okay. And dollar yen. Okay. We did that, right? Where are we now? Come on, Greg. Oh, pound yen. I threw pound yen in there, the dragon. Somebody called it, well, it's called the gopher. It's like, really? You take the dragon and called it a gopher? Does that look like it spells gopher? Come on now. All right, the dragon. GBPJPY. Right. Any dragon riders out there? Hope you guys are enjoying what's going on here. And you're learning something about the markets. Okay. If not, it's quite entertaining. Okay. Wow, we pound yen. And, oh, you go away. All right. But we've got to let go. Let go. All right. So this is our daily chart. We are right around the break-even area of the 13-period moving average. We're not below. We're a little bit higher, so it's neutral. But this has come up from here. This was a big sell bar. Buyers stepped in. Big buying pressure, pushing this up like a rocket. And then we have like a pennant, right? And if we get some good news from the trade, the trade with China, and if the government shutdown's averted, and Brexit is not as bad, and we get a soft landing. Remember, March is coming up, and there's the deadline for signing the Brexit, for a soft Brexit is coming to a close. Now Theresa May did suffer a defeat, but you know how they are. They're probably all pushing for some type of agreement. Let's give her a really big defeat so the Eurozone can feel sorry for her and give her a better deal, maybe. Oh, politics, guys. But we got a nice little projection pennant. We can take taking this as an ABC, which is, looking at this as, 3, 4, 5 ABC, then I'm looking higher. Long as we stay, the other, could be wrong. Then we break that wedge or that flag, then we go down to 130.59, right? So the bears want to take it down, bulls want to take it up. They try to take it down, but then we got this bullish candle at the end of the week. So that's kind of going to empower the bulls to go farther up and take it higher. Okay. So, but a break above 43.21. This is going to have rockets to go to the upside. We break 40.72. See you later. The stampede of the bears. Or do bears stampede? No, they kind of like growl. Okay. USD CAD. This is the one I'm saying that I looked at the. You could look at the. If you're in the U.S., just look at the oil pump and you can see that. Oh, look at that. We're again on this side of the trend. We are on the other side. Higher swing highs. Yeah, baby. Oh, break below the 13 period MA. Drop. Oh, rally up. No way. Drop. New low. Rally up. Lower high, lower low. We have a downtrend channel. So I'll say that 10 times fast. Downtrend channel, downtrend channel, downtrend channel. So we have this downtrend channel, and we look for maybe a touch back in there, right? And then we're probably bouncing off Fibonacci supports and resistance. Right there. Come on, right there. All right. 36.66. And we bounced off of the 61% retracement zone. Come on. Camel. Alrighty then. Alright. Alright. So we could come back down, tag this 3100 area. Whole number, round number, 1 spot 3000. Holding, baby. Banker's resistance is the name of the game, baby. I don't know if anyone's teaching that or talking about that, but even if you don't have fibs, if you know it's ending in 0000 or 5025, you can watch the video. Go to my website. You can watch it there. Go to elitetradersuniversity.com. Yeah, that's it. That's who I work for. All right, dollar CAD, and let's take a look. Lower time frame. Drop it down to 4-hour chart. Oh, look, double top at the whole number round number. Hey, Greg didn't teach me anything. It's a big sales video. I'm sorry. I can't make stuff more clear. He's like, a hint? Okay. All right. I'm probably just giving you the keys to the kingdom. You just don't know where the lock is. Okay, anyway. UK 100. I'm sorry. I didn't mean to do that. Oh, you're going to do me like that, right? All right. Alrighty. F, T, S, E. Okay. How about XAU? Okay. So let's go to SPX 500. It will give me the same thing. Oh, okay. Well, okay. So certain things we'll go to gold. XAG USD. XA silver. We're not gonna go silver because silver and gold kind of move the same. Let's go to gold. Okay. And gold is picking up. It's picking up. If the dollar is rolling over, gold continues to pick up. Nice consolidation. Nice consolidation. Breakout. We can see 1326.20. Old high. Double top is the minimum target, but we could see an expansion to the 1330 area, right? And we can even do a 100% expansion target and say, okay, 100%. Let's we can do a measurement objective. So how do you do that? We'll measure that. Yeah, you can draw a line. Come on, guys. Kindergarten. Draw the line. Then take the line and stack it on top of the other line. Well, Greg, that's really far away. I don't think it's going to go that far. No, it's not going to do that like in one day. It's probably over time, right? That's if we haven't done a 100% expansion already. And, I mean, we'll see. But at least, first target and maybe, halfway second target, right? Right. Let's see if we got oil. Do we have oil? U.S. oil? Yeah. All right. Hey, now. My Forex heat map has got some stuff on it. And look at oil. Inverted head and shoulders, baby. Shoulder, head, shoulder. Dude. Uh-oh. 1, 2. Oh. Oh. Inverted head and shoulders. That's bullish. I told you, I haven't even looked at an oil chart. I just looked at the gas pump. I like, look, it cost me $37 to fill up my tank. Oil must be on the upswing. I got a built-in indicator at the Texaco gas station, right here in the corner of Windhaven Farm and Windhaven and the Dallas Tollway. I look at the sign, I go, oil's up, right? And it's just getting started. And based on the price projection, what we do is we measure the head to the neckline. This is called the neckline. This is the head, shoulder. I know it's kind of like Quasimodo. You know the Hunchback of Notre Dame? You know the guy kind of like, ugh, okay. Don't email me about disabilities, okay? Anyway. So there you go. So 62.59, we're looking for a move up there as the price projection right there. All right. However, the alternative scenario, if we break the low of the shoulder there at 50.93, basically break the 50 area, right? If we break down below that, then we return and test the low. Doubtful, but possible, right? We've already got a break, lots of stacking candles. We take out 55, 70, 75 area. Oh, banker's number, hello. He's not teaching anything, he's just a sales video. It's like, dude, bankers were supporting resistance, man. I work for a bank, hello. It's like, I know he's got to be tired here. They're going, ugh. Anyway, SPX, we got 2 left, and then we'll let you go. I go, please, Greg, end this thing already. I'm just so tired of you. It's like, no, you're not. No. You're back for more. You were here last week, so. All right, what are we doing? Oh, easy. UK 100. CFD. I know I can type the actual currency. I'm typing. Why are you looking at the CFD, Greg, instead of looking at the actual index? I don't know. Right? Maybe I can't spell FTS E100. Now, and another, ooh, look at this. Inverted head and shoulders, and way too much information for you guys. Oh, man. Remove all drawing tools. But this is inverted head and shoulders, right? You learned something. Really? There we go. So now all head and shoulders are neat and pretty and perfect. Sometimes they're a little bit in the wild side. And this is like a big gap down, all these red candles. So we may continue to rally higher. So, and usually the smart money is already in this thing already. And it'd be interesting to look at sentiment and see if the sentiment on the UK FTSE 100 is bearish, and people are just getting smoked right now. Why? Because they think this is a downtrend, lower swing highs and lower swing lows. Like, look, we just broke the trend line. We broke the daily downward trend line. We broke that baby. We broke that bad boy. And bam! To the upside. Whoa! Hit could go all the way! Or maybe not, right? Where was I? I'm doing insightful analysis using Fibonacci and price pattern analysis. Yeah. Tell me how to make money, Greg. Yeah. This thing looks like long. Long as we stay above 70.62, this baby looks like it wants to rock and roll back to 75.47. Right? And let's take a look at the S&P. Go across the pond and go to the SPX 500. And this is my analysis here. We have supply zone. This thing was struggling with that zone, But bam! We got a big breakout to the north side, baby. So this count is invalid. We look for a trend line break. Did not get it. Rejected. And it broke the trend line, came back up, and started riding this baby. For this to ride this trend line, there were a lot of buyers that came out of nowhere blowing this stuff apart. And so we're seeing, and we're challenging some old highs there. So looks like this market, this bearish market, may be over. Wow. V bottom. Wow. ABC 1, 2. Oh my goodness. Looks good. Looks good. Something's going on. We did not, we broke the supply zone. And we broke above the high. I mean, we still got to get above these here. And we got a long way to go to technically heal. But man, what a major comeback. If we get back to 29.43 and break the high there, well, this thing's going up to like 3,400 or something, Yeah. This was like, So, yeah, forget these counts. These counts are like, the steepness of the decline, it washed out so many bulls, and now it's like completely oversold, and now we're just on this trend line here is riding this. We're just riding that trend line up and up and up and up. So up and away, guys. So again, we got to get above these highs here. There's like 3 towers right there. We break the 28.14 area. We're probably rolling to 29.43, 3,000 and beyond. You heard it here first, guys. And it'd be interesting to look at the sentiment. Let's look at the sentiment indicator on that. I'm curious. Unscripted, guys. I mean, I had an outline. Sentiment and instruments. I wonder if they have trombones. Okay. And whoa, we got lots of different instruments there. All right, and they're probably in alphabetical order. Yeah. So I could probably go, oh, look how hokey smoke, Rocky. Hey, what's real rabbit on my hat? Again, nothing up my sleeve. SPY. Oh, wow, look at that. Well, the spiders. 71% of people are short the market, guys. Yeah, this thing is poised to go blast off to the moon, right? Let's look at the FTSE. Again, the retail traders could be right. It could be. FTSE, FT, can't spell it. I can spell it. IT. UK, no, right? US, USA, UK, gilt, UK. Okay. All right. So how about F? How about under F? FTSE, FTSE? No. Okay. I'll find it later, and then we'll talk about it. Okay. But right now, things look bullish. Okay, and the dollar looks bearish for the most part. And okay. So, see, did I do my job? You guys think I did okay? Let me know in the chat box. Did I do okay? Big howdy do to all of you. And let's go to LeeTradersUniversity.com. All right. Not much to see there, but you can click to register a video. And that video will tell you more about bankers level support and resistance. Also tells you about interbank market analysis. And also tell you about institutional order flow. And also, if you watch to the end, there is a free coaching call with me, 1 hour, that you could possibly win. So only one per household, and if you're selected. So go ahead and fill this out, register, and you can watch. You don't have to schedule something in advance. You can watch the replay, and that will show you about the fundamentals, the basis of pip and run. And don't forget to visit my Forex heat map and institute. Oh, you can also subscribe here. Go to my weekly pip and run market map video newsletter, which you're watching right now. Click subscribe and enter your, if it works. Yeah, enter your name and email address. You You don't have to enter your phone if you don't want to, but I could call you. I'm like, hey, what's up? You want to do the hey, what's going on in the trade? I'm okay. Yeah. So give me your phone number. I won't spam you or sell your information because I don't like people doing it to me, and I wouldn't do it to you. So anyway, that's it for me. Again, you go to my Forex heat map, and you can subscribe for $1. All right. And if you're one of the few that jump on this deal, I'll give you a lifetime subscription. Lifetime as long as Forex Paydays is around or Forex Heat Map is around. But we can go ahead and give you the platinum package. Boom, 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 boom. So go ahead and sign up now and let me know what you think. Send me an email at greg@elitetradersu.com. And if you have any questions or comments, I think I have something like that. Do I have an end of slide there? Yeah. Greg, don't go there. Don't go there. Go here. What's that? Yeah, right here. greg@elitetradersu.com. Okay? Talk to you soon. Peace and pips. Love you all. We'll talk to you soon. See you on Facebook. See you in Twitter, too. You can go follow me on Twitter and go to my YouTube channel, like, and give me suggestions on anything you want to hear. All right. Bye.